Morning, everybody. It's the 16th of August. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve, and happy Monday to you.
Good morning, mate. Happy Monday to you too.
Did you have a nice
Start of
weekend?
another rip-roaring week.
Let's
Yeah,
hope so.
pretty nice weekend. Yeah, not
Rugby
too
was all
bad.
right, wasn't it?
Yeah, it was all right. All good in the hood.
Good. We won't talk about football because that was an absolute shit show.
Oh dear.
Yeah.
That's a lot of
Well,
distant memory now. Friday night, wasn't it?
yeah, all that anticipation and excitement for us build up to the new season, then whoosh, have some of that, Joe. This is going to be a tough old season for you, mate.
Yeah, and then Spurs go and beat City yesterday.
Yeah, just what we needed, just to compound it. So yeah, at least yeah, well, normally we'd at least have a bit of a European adventure to thrash some unknown team 4-0 during the week, but we haven't even got that this season. So it's a painstaking wait till the next Premier League game, unfortunately.
Yeah.
Anyway, right, news. Obviously, big news over the weekend. If you haven't been following it, it's with regards to what's going on in Afghanistan. And Taliban leaders marched into Kabul on Sunday, and they're preparing to take full control of Afghanistan 2 decades after they were removed by the US military. So as soon as the US decide they no longer need to be there, the place has fallen within a week, basically, which is obviously not a very good look for anybody that's been involved, and all the people that have sacrificed lives, to be part of trying to make it a peaceful area over the last 20 years. It's leaves a bit of a bitter taste, that's for sure.
Yeah. It's happened before, and it'll happen again.
Yeah. Lots of comparisons to what happened with Vietnam all those years ago, I think 1975. So we'll see what happens, but yeah, it's certainly not going to go away from the news anytime soon. And obviously, what else is very much in the news is what's going on with coronavirus. The Delta variant has left near record cases in Thailand, Vietnam, as well as the Philippines. The strain also drove daily Russian deaths to a record, and also cases in Germany rose the most since May. So in the US, the 7-day average of COVID-19 deaths almost doubled in 2 weeks to its highest level since May. So clearly, we aren't in control of this either. And despite the fact that vaccines are being rolled out, the numbers are still concerningly high at this stage. So hopefully that does drop in the near future. With regards to cryptocurrencies, the total market value of cryptocurrencies rose above 2 trillion again as Bitcoin continued to climb, and the likes of Cardano, Ripple, and Dogecoin also advanced very well. The move came even after the cryptocurrency industry failed to win a change to crypto tax reporting rules in the US infrastructure bill. So we'll come on to the charts on that very soon. And in terms of bullish bets on the US dollar, they're back at levels last seen at the height of the market's coronavirus fears last year. The net long non-commercial positions in futures linked to the ICE US dollar index have surged to the most since March 2020, according to the latest Commodity Futures Trading Commission data. So that's quite interesting as well. And again, we'll come into the charts of that. In terms of stocks today, we've all opened a little bit lower. That's following on from what we saw in Asia. We saw sluggish Chinese economic data and obviously these fresh virus outbreaks weighing on sentiment. In terms of action, there's not a lot going on today. We'll come on to the day ahead at the end of the video, but I think that gives us an opportunity to dive into the charts, Steve. Is there anything that's caught your eye over the weekend or any particular place you want to start today?
Well, we'll start with cryptos. As you mentioned, it's everything seems to have woken up. The Bitcoin has just stalled in front of, well, just above 48,000. More recently, the latest swing high got to 48,030. On the daily chart, it's still looking pretty positive. These are like little topping candles here, but I think these will be shrugged off. This sort of impulsive move higher since the break of 41,300 has been pretty good. On the weekly chart, obviously, it can give us a bit of a better insight as to retracement levels we're looking for. 51,030 is the 61.8% fib. We've got a triple bottom with the neckline at 41,300. That leaves a measured move target coming in around about 52,300. So that looks pretty positive. Ethereum, Ripple, and Cardano finally woke up to what was going on, and they have sort of like a projected higher also. Again, we can look at the Fibonacci on the daily chart, just in front of the 61.8% fib retracement level, 33,500. Sorry, 3,350. Let's get it right, Steve. On Ripple, stalled a little bit lower than that, and it's left a little bit of an indecisive doji candle. So not completely convinced yet, but all pointing upwards at the moment, and much better from Cardano. And that retracement is kicked on even as high as above the 78.6% Fibonacci retracement from the 16th of May, which if we look at the Bitcoin, 16th of May, we were down here. So still a bit of a way to go. So Cardano actually outperforming all of those. So well done you. On to commodities. Going to take a look at commodities now. We're going to start with oil. The weekly chart, obviously top information. If we make this into a monthly chart, we've got this evening doji star formation, which is playing out quite nicely, looking for a bit more correction to the downside on that. The daily chart has broken below the trend line, popped back up to retest, try and gain ground above it, but has failed again. So we've had, this is a third negative day of price action there, looking to sell rallies in that this morning in front of this just swing high we've just seen, 69.39. So yeah, looking a little bit bearish on the short-term chart, and obviously on the long-term chart, on that monthly chart, it looks a little bit ominous for oil. On gold side of things, a little bit of a correction higher. We've reacted off this previous support area down below 1680. Really strong reaction from there, and we've pushed further above resistance at 1755, got up to just above 1780, coming in, I think the high was 1782 to 83. So yeah, looks a bit of a positive reaction, but just over the last 8 hours, we've got a bearish outside candle on there. So maybe we're going to stall there and come back and retest this 1750-55 area of support. Again, looking to sell that on an intraday basis. Going across to the indices now, and again, we've got these typical topping formations that we see so regular. And I'm looking at the daily chart on the FTSE. We've managed to stall at 72.35, so that's quite a significant high to watch out for now. Retrace from there, 71.68 trading. Next level of support coming in around about 71.25. On the DAX, new all-time high in DAX that came in and posted, well, I mean, it was a bit of a doji candle, 16,030. So that's obviously a significant technical level, because 16,000, we like round numbers. It's a psychological resistance, and it's reacted really nicely from there. If we do get this continuation lower today, again, it's a little bit like an evening doji star formation, so could be potential for a further swing back. But we've reacted on the day. It's obviously we've had some decent, we'll break it down to the 30-minute chart just to get a look. So this really decent aggressive sell-off to 15,855, and then a reaction higher, almost 100-point rally from there. So very volatile, but as I say, could be a little bit toppy after the rejection of the 16,000 level. We'll have to wait and see. On the Dow Jones side of things, again, pushing on another all-time high, coming in now. Last week's high, 35,613. Pretty impressive. No sign really of this slowing down over the medium term, but on a short-term basis, again, we've got a bit of a shooting star formation, the hanging man candle potentially, or a reversal candle when this plays out. This is a daily candle, but a shooting star potential here. So again, maybe a little bit weaker on the indices running into the start of the week. On the Dow side of things, yeah, same old, 15,184 is an all-time high last week, and we've got off to a pretty decent start this week. Reacted from the Ichimoku cloud, reacted higher, but again stalled just in front of resistance. So little bit backfooting, although the reaction in the last hour or so from the 8 o'clock open was pretty positive, but will it hold on to those gains? I'm not so sure yet. Aussie 200 is off the highs, little bit of a corrective move lower, support coming in at 75.75, about 25 points higher than that. China 50, let's get a look at the slightly longer term chart on this. China 50, we're in a bit of a wedge formation. So that looks something to definitely keep an eye on. A little bit of wedge like that. So that is a potential bearish formation. And we keep a close eye on the China 50. Hang Seng again under pressure from this head and shoulders formation, just rejected a move above 26,800. Back down and looking really to get below this support around about the 26,000 level to continue the move lower. And Nikkei under pressure in this descending triangle formation, really needs a clear break of the 27,000 level to get things hot trotting downwards there. So yeah, that's about it, Joe. What's the FX look like?
Great roundup, thank you. So FX, not really major changes from what we discussed last week, but bring up the charts and have a quick look. So this is the dollar index. Obviously making a big deal of this resistance at 93.19. We've touched it on a couple of occasions now and failed so far. On Friday, we did see quite a bit of a sell-off actually, and that's despite the number of long bets increasing now, according to the CFTC data on the dollar index, but certainly no sign of it overcoming that resistance just yet. And above that 93.19 level, we've got this 93.43 level, which for me is all important, because if it gets above that, we complete quite a nice looking double bottom pattern. So still of the opinion that dollar index is going to move higher, but certainly not going to be a straightforward move, and we are probably going to see a bit more chop in the short term before we can actually have another attempt at overcoming that level. So maybe what we're seeing now is some sort of uptrend forming. I mean, I'm cutting through a bit of a few wicks down here, but in terms of closes, that looks pretty good. So maybe we'll see some buyers stepping around 92.35 today. We'll have to wait and see. But overall, I am bullish on dollar index, and that therefore means I'm bearish on euro dollar. So this is the head and shoulders top pattern that I've been talking about for some time now on the daily chart. We have broke through the neckline here on an impulsive move down. That's the upward trending line. What I'd prefer to see is us take out this low here from the 31st of March. I think if we can do that, then the idea of the head and shoulders top pattern really has been confirmed for me, and we can expect lower prices over the medium term. What you could arguably say we're doing today, and what we did on Friday, was rally into the neckline of this head and shoulders top pattern, certainly the upward trending trend line that you can see there, and it seems to have stalled today. The volumes have dropped off in the last few days or so. So clearly there's not a huge amount of participation at the moment, and I imagine that's a seasonal thing, given that it is summer in Europe and the US. So people will be taking holidays and not involved too much in financial markets at the moment. That's probably why we're not seeing huge amounts of volatility as well. So still think there's lower prices to come here. I would be looking to sell into rallies probably to around 118.50 on euro dollar, but ultimately I'd like to see it break this 117.04 level, and if we do that, then I think lower prices will be seen. Looking elsewhere, Aussie Yen looks quite interesting today. I've got a sort of top pattern that's formed here on the daily charts, and we appear to have formed some sort of continuation pattern in recent hours. So we're breaking down below that sort of consolidation or flag maybe that we formed on the daily chart, and it looks as though we're going to see a continuation lower on that. Obviously, we've got to take out these lows that we posted on the 20th of July at 79.84, but the measured move of this sort of top pattern that we have here is down at 79.16. That also marries up with a little bit of support here from the low of the wick of this candle on the 28th of January. So for me, that would be the target level on an intraday basis or a short-term basis of where price could go to. If we break below that, then I think we could be heading quite significantly lower on Aussie Yen over the medium term. Aussie dollar price action hasn't really gone anywhere for the last couple of weeks or so. So this has already completed a head and shoulders top. And I'm looking now for signs of a continuation lower. So we formed this bit of a channel here or a flag. We broke below it, but we haven't sort of continued to move lower in any sort of aggressive manner. But I think we are going to see lower prices there. So again, I would be looking to sell into rallies to this. And ultimately, I think we'll see prices move down to sort of 70, 50, potentially as low as 67, 65 over the sort of more medium to long term. So the outlook doesn't look particularly great for that. If we look at some of the euro currencies, they're really under pressure today. This is Euro Swiss, not the most interesting of markets to trade. It's generally quite tight ranges that it trades in, but you can see here a nicely formed downtrend. We've rallied higher over the last few sessions, but on Friday posted quite an aggressive reversal candle there, and now we're moving lower once again. So not looking good there. Euro Yen, similar sort of situation, trading in the short term in a bearish sort of channel or wedge. Key support at 128.59, which it's getting ever closer to. If that breaks, then I think there's a lot of fresh air for this to move into on the downside. Let's just have a quick look at cable. So that kind of posted a bit of an engulfing candle on Friday, but there's no sort of clear direction here. I think ultimately it's probably in the process of forming a top in line with this dollar index bottom that I think is taking shape. So no clear indication on where that's going for me at the moment, but my bias would be selling into rallies on that for now. So that's pretty much it on the FX side of things today.
Nice one, Joe.
Okay, gun to the head trades from Friday. We did have a pretty good run up until sort of later part of last week, and then I think on Thursday and Friday we had consecutive stop out. So I was short of euro sterling, which was stopped, and Steve, you went short of oil, which was stopped. So not a fantastic end to the week, but Steve still reveling in his hot streak that he had over last week or so. So looking pretty good for you. Anything you fancy today?
I'm going to sort of like focus a little bit more on oil now. I think we've got this level to watch sort of down below, which will be a little bit supportive. Formed a nice top, 1782 here, and yeah, I think we could potentially get an ABC correction lower, just to here, which gives a little bit of potential for a nice trade idea. If I want to be a little bit aggressive on it, yeah, somewhere around here would be good. Getting short here at 1774.63, having the stop, having a only a 3-tick stop. But then I'm only looking for 9 ticks on the downside, so the risk is 3 to 1. Yeah, just form this sort of like a bearish dark cloud cover here. Looks like an A, B, C, D correction, and nice target around 1765 would be quite good. I think that's me. The gold.
Cool. So I'm just having a flick through a few things. I mean, I've just slaughtered Aussie Yen on the daily chart, saying it's going much lower. But when I zoom into the hourly chart, just technical analysis in its real sort of simplest form, we've got a low here from the 3rd of August, and price has fallen quite dramatically into that level. And then we've seen this candle posted over the last hour or so, which has been backed up with further buying today. So just a really, really simple, this is support quite clearly. It seems to have found some buyers. We made a marginal new low, maybe flushed out a few stops. and maybe there's an opportunity for this to have a very short-term bounce. I am bearish of this overall, so any bounce higher for me would just represent an opportunity to sell into. But if we're looking at this from a perspective of trying to be able to trade two ways on markets, then I think there's maybe a bit of scope for upside here. So I'm going to keep it really tight. I'm going to buy it now at 80.29. Going to place a stop loss below the lows that we've just seen. So only a 17 tick stop, and I'm going to look for a move back up to these levels here. So that's 2.44R today, which is 80.70 as a target.
Excellent.
Counter trend, very much intraday, but just assessing price action on this hourly chart. Clearly there's support, clearly there's been a bit of a reversal, so let's see if there can be any follow through buying to the upside before the sellers again step in.
Excellent. Cheers.
Okay, data-wise, overnight we did see a raft of disappointing Chinese economic figures, which saw selling pressure take hold, which is why we're under a bit of pressure on the indices so far today. But in terms of what we can expect for the rest of the session, we've got US Empire State Manufacturing, which is due out at 130. The index is expected to fall to 35. It is classified as a high impact data point. How much influence it will have, I'm not entirely sure, but it is something that you, of course, should be aware of if you're trading today. I think that's it, Steve, from me. Just a reminder that in England, the threat of the pandemic comes to an end today. That's something I forgot to mention earlier. If you're fully vaccinated, people who've been in close contact with COVID-19 cases will be exempt from self-isolation.
Well, completely. It would not even have to. Oh, okay.
No more isolation if you're double vaccinated.
Nice.
I saw that fly there.
Yeah, I know. See it.
He's intruding. Yeah.
He wants to get on TV. He's just landed on my wrist. I'm the fly whisperer.
Lovely. All right, man. Let's wrap it up there. Have a great day, everybody, and we'll be back tomorrow.
Cheers.
Bye-bye.